All right, all right. I'm gonna yawn again, probably 100 times, but welcome to the daily recap of the 7th of March. And there you already have it. Um, a bit early with the recap, but my energy levels are low, probably because I'm not outside at all. I have to go more outside, need more sunlight, need more fresh air. But we're gonna do this anyway. I'm gonna cover this trade as well. I won't make a case study of this because it's not like my proper plan right now. I'm still not sure if I want to use this. I rather maybe maybe just use this. But high time frame, I like it. I like the idea of having a high time frame strategy. Just swing something. Uh, but thing is, if my high time frame strategy requires a different vision on the market, that's like hard to combine with the low time frame strategy. For example, this is not the case right now, but there are some different things. But for example, let's say my low time frame strategy um is like it's right now, you know how it is. And then let's say my high time frame strategy is requiring support and resistance, and then some different low time frame stuff, or some Fibonacci levels or whatever, or like trend lines or liquidity in a different way, then it will get like maybe a bit confusing, especially when you're like in the same area. So that happened this morning. Was lucky that there was no trade for me, or the tag was not there. But like this trade, this like this ended or presented after New York, and New York yesterday. So it was valid, and I placed it as a paper trade. But because that trade was there, I was not like focused on this, and I was just looking at this from a high time frame perspective. Well, actually, like I showed here, like we got early sellers. I didn't see that after at all, only after it happened. I had the push up mentioned, and I knew that like it was a fake move. It's Tuesday. Tuesday can set the tone for the week. Learned that today. Actually, learned it already way back, but I forgot about it. So it's good that I got remembered. And then with that, Tuesday set the tone for the week. And as we know, London can set the tone for the day, and London can be the swing like we had here. London swing, London swing. Was like, okay, we will push up in Frankfurt, and then we will sell off in uh in London or around that. Just like form a swing high and then turn around. So that was my idea, and that happened. So let's break down this trade. Where are we? Let's break down the trade first before we go like into other stuff. Hold up. Let me take a sip of water. So for the trade, we had this bullish range. We also knew, like from the DXY, that we want to take out this high. Um, that being said, like we took liquidity to the downside, so we want to move to the upside now. Take liquidity to the upside. And same on euro. What the fuck? We took liquidity to the upside, so now we want to move to the downside. And we know that we have these lows over here. We had the trend line I was speaking about yesterday as well. Want to target that. And then what happened today? We actually let's go to this one. It's cleaner. Price. We had this bearish range. We can see. Don't mind all this. I was backtesting this strategy and actually ended up backtesting liquidity because I couldn't like focus on the strategy. I don't know why, but it doesn't matter. So we ended up coming deeper into that range, taking out this high, which was a previous weekly high. And that was reason enough for me to look for that short. And then we got the swing form. We got some swings formed here over here, 50-minute 3-pin patterns that function as like inducements, maybe. People that think like, all right, we have like a support area over here. So like this. They think, all right, we're gonna sell off because we got the moves to the downside. We wick into the area and then we close to the downside. But actually, we take out the highs. We got the swing break. We got liquidity building up, and actually, I already set my order as soon as we broke to the downside here. What the? So annoying because I get like energy from making these, and yeah, I'm yawning. So, but I already set that order, and then 1 pip above the high. Could even do my like more breathing room. Maybe I did more. No, I didn't. Like 1 pip, but you could do 1.5 or 2. And then what we can see is like, yeah, we broke to the downside, but before that we got Asia high over here that was taken. We got like a fake break to the downside. That's already sellers for this trade over here, which I will cover on the other chart. And then we can see price breaks down. Then below this low, we reduce our stop loss. Well, because we almost got taken out, there's not much to reduce. And then we have this bullish range from this low up to this high. So let me zoom out so you can see it more clearly. And knowing that we kept respecting that, I was like a bit conservative in terms of going break even. So 1 to 5, and over here you go bullish, or you reach the discount of that bullish range. So therefore, I should practice my English, like make it sound less Dutch. I can talk like this the whole time and then no, okay. So break even is, where did I go break even? Where did I go break even? Let me check. I think this didn't reach the discount or the premium, so that's why I didn't go break even. Yeah. Yeah, exactly. So it didn't reach discount or premium, therefore didn't go break even. I went break even just by hitting 1 to 5. Took out 60% of the trade. Well, it's a paper trade, so it doesn't really matter, but the idea is there. 60% here and 40% at the liquidity target, and then price teams down. Still with the idea of this trend line. And finally, this trend line got taken out. We come below this low and we break bearish on this structure. We'll cover that as well. So initially we'll look for longs over here, but because I'm not trading New York anymore with the scalp strategy, I'm not really bothered. Scalp. And yeah, that's basically the trade. So 50-minute swing or market structure shifts, what they call it, just to break structure. 50-minute fair value gap, entries above the high. The thing is, I've been backtesting this. This is luckily a small range, but if you get big ranges, that's why I'm like maybe not really into this strategy. I thought it would be nice, but if you get like the big ranges, you have to zoom in. You have to go lower. You still have to go lower on other time frames and then trade it like that. Because if it's bigger, you get like easily these huge stops. So let me show you real quick over here. Where are my trades? Did I remove them? No. I surely didn't. There you go. So over here, 50 pip stop, 26 pip stop, 36 pip stop, 41 pip stop, 27 pip stop. So, and this one is even same as this one. And this one, we're all below the order block. Yeah, so really for that, you still want to zoom in and then you still actually end up using your same low time frame strategy. So I don't want to use that. I don't want to do that. So I'm a bit in like conflict with myself whether I want to do that or not. But let's go into this price action here. Actually, let's remove that fair value gap. Let's keep that swing. Why? Because we took out the previous weekly high, we took out a previous daily high later, but we took out a previous weekly high and we created a bearish break on a 50-minute time frame. We got a low, a high, a higher low, a higher high, and a bearish break. So therefore, we can look for shorts. And also we can like maybe say Asia high won't be taken because we already took a large liquidity pool, which is this one. And then we had this, I spoke about this on the recap from yesterday. We had this 2-minute POI from, I think it's 6.5 pips. For the graphic or memory, right? 6.5, 6.4, almost. But anyway, so so we had that above. We respected that. What my English? Can I get it back? All right. So what makes this a strong POI is that we get the bearish order flow over here, and then we get the bullish break. So we get disruption of highs and then continuation down. So basically from here we move down. Another thing is that we never reach discount from this area, if I'm correct. Nope, so we never reached discount. And as when we come back, like this is the we reached discount over here, or already over here, but then we don't break bearish like below this low. So you could also say like you have this structure. Where's my thingy? You have a high, a low, and then this would be your lower high that didn't create a lower low. So therefore, this will be the lower high. I'm almost certain. Why? Because we have this high, this low, then this area that breaks above this takes liquidity. Now we broke. My screen is. I should stop kicking my cables. Then this high that breaks this high still respects the 2-minute order block, still respects this range, and takes out a trend line. And now we have this low, high, higher, low, higher, high, higher, low, higher, high, bearish break. So we have this structure with the blue thingies realigning. Well, not there, realigning with this one. So I'm pretty certain that we will break continue bearish. Maybe we'll come up, but I think this will be the high of the week, and then we can come up here and sell off. But seeing this impulse, this was caused by news. Ooh, that's pretty interesting. Hold up. So that's caused by news. Let's go to the 5-minute. So we might come above here, take that out, and then continue selling off. But we can also like come above here, take the New York high. And then sell off. And that would be ideal because if we come above here, we have a 5-minute POI that sits right there. And we can even come above that 5-minute POI, and we have this fair value gap area on the 15-minute where you can trade from. However, I think it's kind of mitigated, but still. So that's interesting. So look for shorts from where? From this area, because that's where the impulse came from. But more so from this area because we get a disruption of highs over here. You can see high and low, high, high, bearish break, bullish break, continuation down. And let's clean up these drawings. This might take a second. Hold up. Stay with me. I have to stay with myself. I'm not. Another mistake I made this morning as well. It's not like a trading. It's a trading mistake. Call it like that. But now that I'm not trading New York anymore, I want to be more productive in New York. And actually, I want to be less productive in London. So I want to just trade in London. But instead of doing that, I did like a lot of stuff outside of trading, some work, some reading, some webinar, did something else. Yeah, watch the ICT video. So yeah. So I actually did too much, and that distracted me also from seeing that potential setup. Now let's go into that setup. Let's go into actual price action. Because so now we discuss where we are and what we can expect and where we can go. looking at the candles as well. Let's talk about candle formations before we go lower. We can see yesterday we closed above that weekly, and we wicked above that weekly, sorry, and we closed below. More, you can see it better over here. Close above that weekly, and saying it again, wicked above that weekly and close below, taking out this high, respecting that 2-minute block over there. But it was still a strong push to the upside nonetheless. So yeah, so why then look for shorts? Because we take a large liquidity pool. Then after we take that, we can see on the 4-hour, this candle's not telling us that we're going down. If anything, we can go up higher, come up higher. Why? There's like push to the downside and then buyers take over again. We close bearish, but not that much. Then we get like an indecisive candle on the 4 over here. That's the open of a close of the day and open of open Asia session. Damn, Asian session. Another indecisive candle, also Asian session. And then we get this push down, which is this trade. There's a trade, but not quite fit my plan. I'll also make my plan more detailed, so less if and buts. And actually said like, all right, if I trade it from the 1 minute, I want to take the 1 minute fair value gap. If I trade a 2-minute, 3-minute, 5-minute block, I want to take the block plus the breathing room. That's it. Not more, nothing more, nothing less. And that being said, either way, either using the 1 minute block or fair value gap or using the 2-3 minute block, there was no entry drill for me or no tag this morning. So we break below, we have this bearish range. Now, what makes this a bit tricky is that we actually turn bullish by taking out the previous daily high. On that 50-minute, we turn bullish. But then again, know where we are, know what liquidity pools we took. Also, seeing that we didn't reach the discount yet of that pool or of that range, we can look for shorts. Let's dive down deeper. No, actually, let's first discuss the price. Let's look at these candles. So, a lot of black candles, bearish candles, but not strong candles. A lot of wicks to the downside. Actually, see how we break below this and then wick to the upside. Then eventually we do break below, and we got the strong push to the downside, just taking Asia low and actually closing underneath. I want to see if that's the same over here. I actually like these FXing charts better. I used to use FXing a lot back in the days. See, this one didn't close below, so it's interesting. We take the liquidity pool, wick below, turn around. Then we want to know, like, okay, where did we react from? We don't need New York yet. So what sits below Asia low? Is there a PY? What is there? Let's actually just use that thing again. Oh, wrong one. So this is the wick. I can't. Why is this not? Yeah, thank you. I think it was 2 minute. I know there was something. I'm pretty sure there was something. This really mitigate. I don't know. So just came below that this wick and turn around. This was following order flow. What did the wick say as well? So here, same story. It's not like, yeah, we took it out, but not much. And probably over here, it's even better to see. Yeah, so here we just don't. Here we don't close below at all. You close above, so that's over here. It's even better to see like that the wicks just take the liquidity or people trying to sell over here. Why would they sell over here? Well, we have a low, a high, a higher low, a higher high, or to buy over here because we have the order block sitting here in the deepest discount of that bullish range. So they would like to buy over here. And actually, you could buy over here, knowing that if you wait for the wicks to close or the candles to close, and then you could like say, yeah, well, not really, because you still get wicked out, but the idea is there, you know. Screen is tripping. Stop. Why? All right. So we took out the Asia low then, and then we push up and type this. So this are early sellers. Why early sellers? We got a low, a high, higher low, higher high, higher low, higher high. We take out this liquidity to the upside. Respect this beautiful block over here, and it actually gives a sell entry already if you trade like that. So you can see this. We had this minor push to the downside. Let's go in the 1 minute. The so yeah. So you can see like a minor break to the downside, then taking out that liquidity, and then the move comes from this 1 minute block. So if you refine it, you get a sick trade. Doesn't fit my plan at all, but doesn't mean that it's not sick. There you go. You can actually, if you trade this time, you can actually get a confirmation kind of trade. Where? Well, we get a high or a low, high, higher low, higher high, higher low, higher high. Higher low, higher high. Is that a higher low? I want to make sure that it is, otherwise it's not that sick. Actually, it's not that sick, so there's no real trade there, I bet. In case you want to trade place trade based on liquidity, you get your break over here. You got your liquidity build up over here. And then you get that 3 minute block. So no, there's not. No, never mind. Never mind. Thought it was sick. Was just me dreaming. Then you get your early sellers. Frankfurt pushes up for the first half an hour, and then actually at the, let's see at what time. Pretty curious. 7:40 we turn around. 7:39 we make the highest candle. We break bearish, and this is where the entry drill comes from. So what do we have? We have a low. We have a high. Price reaches discount, just about. We got a slowdown over here. So inducing sellers into the market. Why? Because we got that early sellers over here. So it's pretty normal that they try to sell here, but then we got the beautiful sell order block as well there. So trick a smart money traders into the market, then that one is mitigated, so it's not really interesting. Then we take that out, and then we get our bearish break, and then this is our bearish range. We have this wick as our internal range liquidity, and then there's no entry because, as I said, like if I look for the 1 minute area, I would look for this fair value gap. Even with breathing room, I don't stand a chance. Short. So that's 20, 15. So 5 pips. I need like, and then also in the hope I get tagged. So let's say I need 12 pips to get tagged in. And from the 3 minute, I don't use the breeding room. And then you get this one, and even, or I use the breeding room. So 17, 12. Here's also 5 pips, 0.5 pips. Doesn't take me either. So what I could do, like, is just sell from here, take that liquidity, and place a sell trade from there. And I have a beautiful 5.1 pip stop. Once the tree gets hit at this low, and 1 to 5 gets hit over here. So that's 1 to 5. That's like the refined entry of the. Oh, one thing I gotta mention is you go break even after reaching the discount of this bullish range. I would do that. Why? Because there's still, although we took the liquidity to the upside, there's more liquidity to the upside in the form of these highs, these highs, these highs with this disruption. So same thing what happened over here happened over here as well. So I would go break even quite early. Let's read price further. Then we respect this. Let's take this out real quick. Let's make it cleaner. We got the trend line over here, as I said. Well, I said it. I didn't say that. Well, I said that, but for the other trade. So that's taken out. Then probably 1 to 9-ish. Oh, 1 to 10 actually. Almost 1 to 11 to the 50% of the range. And then we can see like New York high or New York. Again, we got the 50% of that fair value gap that actually gets respected. And candles just come in, but the wicks come in, but the candles close below 50%. So you can maybe look for a trade there. And you get a very intricate trade. If you put your stop above, you wouldn't make it. Maybe just about. But we tap into it for value gap. Come above here again, and then we got like this intricate break. This could be your early sellers, break, and entry. I actually want to know where we reacted from. I want to dive deeper into this. So let's make 2 lines. One over here. Let's see. Let's see what happened to the left. So we got this cluster of trades, candles, which sits at this around the support area. What else is here? I think we have a open price, or it's not there. Hold on. No, that's over here. Just at the news price is equal to London open price from Monday. Mhm. We can see that this reaction is coming from the support area though. Yeah, again. So people try to buy here. Try to buy here. What happens? Boom. So that's reasoning. What else is there? If this fair value gap over here, not reasoning. We get a buy reaction because we get a disruption of lows over here, taking out these lows, then push up. So is there actually buy trade is the question. Because we used to have it on. Early buyers, no. We're straight over here, but nah. Ah. This was actually a nice trade though. If you just take it from the for value gap, beautiful. Target like this liquidity maybe a your low. Take out most of your trade over there. That's a 1 to 4-ish. 1 to 4.2. Take out 80%. Let the rest run to this 50%. Beautiful trade. And actually, if you just like keep in mind that we took out the previous weekly high. We are on Tuesday. We are in London, so we set the tone for the day by pushing down. We take out the previous weekly high. We're in Tuesday, so we might set the high for the week as well. You can hold this trade and try to swing it. Now Powell helped us, but still. Then New York. What happens in New York? New York. Buyers break long entry over here. Break even after this high, and then this is a break even trade. Don't trade outside of your time, not needed, not necessary, don't do it. Previous daily lows taken as well. I want to jump rope. I'm gonna jump rope after this. No, first dinner. So what else is there? Ah, this was this thingy. I'll make it white. Yeah, but it's barely visible. So let's make it green. No, I don't like green. I don't like green. It's turquoise. Turquoise? I don't know what the English word is. Turquoise. Yeah, but what else is there? So we get a reaction from this for value gap. By doing that, we don't reach discount. Let's take this off. Let's take that off. Let's take that off. Let's keep this on. Also, this is a strong area to look for sells because we disrupted these highs over here. Going to highs to the left. Yeah, that's nice. Take it off. Let's take this off. I'll put this on. And let's say line or liquidity. And then option. Trend line taken, trend line can go. This range is gone as well. We have now this range from this high down to whatever low. We break bear. I'm gonna clean up my charts right now. So then we wanted to look for longs, by the way, over here. Let's zoom into there. Let's see what happens. There's nothing. Yes, you get this break, but you don't have early buyers. Are there any early buys over here? Yeah, this wick, but it's shit. This one, this is early buyers. It's way too far from this, so not interested in that. So there's nothing there. Look for longs from here. You know, well, that didn't happen, bro. I have to pee. That can go as well. This can go. We can create an arrow now. Mark an arrow. There you go, bearish break. That's good. Now we get structure realignment, finally. News high. Let's pull that across. Same for New York. Oh, New York high. How about New York high? There you go. With this like impulsive power, I don't think price will come that deep. So we might just be on the lookout for above news and sell from there. But price can also tomorrow like do something over here. Maybe respect some support or resistance area. Actually, where my crosshairs right now, we have one. Not saying that they work. I don't use them, but we have one over here. Sort of. You can see from here, over here, and then from here, it's around that area. Actually, let's make it better. This one, like this. So that's where the push came from. That's where this push came from. That's where this push came from. Yeah. So this one is make even bigger. Don't need to make it snipe. There you go. That's where we're at. That's where we got this accumulate or redistribution coming from. Now we take one low and we induce buyers into the market, and we take the second low. We're gonna take this low as well right away. Look at this. We get this bullish break, or people think it's a bullish break, inducing buyers into the market, and then we get continuation down, taking out that second low, so we can extend this range. So I don't know where. What is the news for tomorrow? Why is it so slow? Because of Zoom, I know. Employment change. Ooh, nice, fun. You know, I've been studying these economic topics and I already forgot almost everything of it. Like just like a school exam. Um, wait, I'll be right back. Wat? Gaan we eten? Oké, kom eraan. Moet even snel afmaken. All right. Dinner's almost served. One of the few benefits from still living at home. Or at my parents or my mom's actually. So what happens here? If we take out that, respect this, low taken, high taken, continuation down, then we get a reaction from below this. Actually create equals. Then we're gonna move to the other chart again. It's the same over here. Boom. Yeah. Then we blast straight through. Could look for shorts here, but I don't know. I'm not certain why. I just have have the feeling like it's a good area to look for shorts. Oh, I just miss us. Right from that, we got like a small buyer inducement, maybe. Yeah, with the bullish break. Um, yeah, it's tricky. It's tricky. I don't know what to say about New York. Like this is clean. This is where the action happened because this is where liquidity was. This is where liquidity is taken, and this is just a continuation after we set the tone. So yeah, let's finish. Let's make it into this recap. I don't know what to cover. Oh, for the straight, did we cover that? I'm not sure. After we take this highs, look at the wick. We wake up and close bearish. Not an indication that we're gonna turn around. Beautiful. 1 hour, even better. Damn, my voice. Yeah, this is even better. So we come above, got the wick, and we close bullish, but that pullback, I think it's almost the size of the entire wrong one. That wick is almost half of the entire candle. Yeah. So we pull back more than 60%, or more than 40%. Um, yeah, that's it. That's it. I don't have anything else to say. I don't use any other stuff yet. I want to use more. I want to get like more into the ICT stuff and not like trade it. Well, the high time strategy, this uses one of the concepts, but not like that's literally one. I don't have any knowledge about it yet, but I want to implement it into my trading, improve my trading. So that's what I'm doing right now, or I'm starting to do. Just watch one video and I couldn't grasp a single bit of it. I didn't understand it at all. But yeah, you know, best thing to do is just get information from anywhere. Just get information. If you have a strategy, get information, more information, just try it out, edit, subtract things, add things to your strategy, and like keep it up to date in that sense. Make it better. You always want to make it better, right? So like for me, there were intricate breaks that didn't work that caused me to fuck up a challenge. Now we just have normal breaks. Normal breaks over here. See, couple candles, not like one weak candle, couple candles. Nice break, and that's better. I can trade like that. I don't need to trade intricate. I can, there the strategy I trade can be traded intricate, but I can't trade it intricate. So why wouldn't do it? Why would I do that? That being said, and just to recap, peace out.